Hello everyone, this is Richard K from Price Action and Income, and welcome to today's video where I'll be talking about Fibonacci ratios, how they are commonly used and how I like to use them as part of my own technical analysis. So please stick around until the end of this video as I will be showing you some really cool concepts and a trade example I traded myself using this unique and reliable analytical tool. Now, before we start looking at charts and how Fibonacci ratios are commonly used, we first have to know where these ratios come from. The first person to write about Fibonacci ratios was a 13th century Italian mathematician called Leonardo of Pisa, who introduced a special sequence of numbers that later became known as Fibonacci numbers or the Fibonacci sequence. These sequence of numbers or ratios can be used to describe the special proportions or building blocks that exist within nature, with the most popular ratio being the 1.618 number, which scientists and mathematicians today refer to as the golden ratio. As in nature, traders through the years have found that these ratios also work very well when performing technical analysis. And I'm sure that every trader that steps into the world of trading will most definitely be introduced to Fibonacci ratios somewhere down the line. Now, these ratios, or as many traders call them fibs for short, can be used in many ways when performing technical analysis. But the two most commonly uses for fibs are known as Fibonacci retracements and Fibonacci extensions, and traders use them extensively when attempting to find future support and resistance levels. Now, when we talk about Fibonacci retracements, then traders will most commonly be using the 0.382%, 0.5%, the 0.618%, also known as the golden ratio, and the 0.786% when it comes to retracements. On the other side, we'll be talking about Fibonacci extensions, and traders most commonly use the 100%, 138.2%, the 161.8%, the 178.6%, and then finally the 200% extension ratios. Okay, let's now apply these ratios to my chart and see how both fib retracements and extensions are commonly used by traders. In the chart in front of you, I pulled up a 4-hour chart of the Euro-US dollar currency pair, and I want to start playing around with my fib retracement levels, which on my platform is located on the left-hand side drawing tool section over here. By simply clicking or scrolling down, I just find my Fibonacci retracement tool, click on it, and then when I want to start applying fib retracements onto a chart, you need to select 2 points or important pivots. In this case, we're going to see how fib retracements provided resistance levels during the extended downtrend on the Euro-US dollar that started in around, when was this? February 2018. So how traders most commonly do this is that they will first connect their fib tool to, let's say in this case, the highest high in 2018, followed by a drop down to this low over here. And one can immediately see that when there was a pull up higher, that price stopped in its track, found resistance at the 0.786% retracement level. If we can just move this down a little bit and continue playing around with this, let's have a look at that little pull up over there. And here you will see that the 0.681% in this case provided resistance before price actually broke out of this consolidation area and trended strongly downwards. If we continue moving this down, let's use that point over there to this point over here. Price came down, went up, made another low, and when it started correcting higher, here yet again we've got the 0.786% Fibonacci retracement level that provided resistance. Let's move from that high to this low over here, and price actually came all the way back. Let's use a different one. Let's go from that high to this low over here, and in this case the 0.5% worked pretty well as resistance. Let's continue moving down as price gyrated downwards, and using that high there, then we have a beautiful touch of the 0.618% again. Let's continue scrolling forward. If we use that high over there with this low over here, Yet again, price stopped dead in its track at the 0.786% retracement level. And we can just continue moving this forward and see if we had any other retracements levels. Let's just do that nice and proper. We had a 0.618% there. Let's go down to this one. Use that one over there. In this case is 0.5%. Scrolled one time forward, the last time forward to that high over there. And here again we could see price found resistance at the 0.618% retracement level. And that's pretty much how traders actually use the retracement level or ratios to find, in this case, a downtrend, areas where a correction might end that goes into the opposite direction of a trend before the trend actually continues moving down again. And that, guys, short and sweet, is just how most traders basically use the Fibonacci retracement levels. Okay, next up is our Fibonacci extension levels, and to select that in my platform, I'll just go to where I went before, and in this case, I'll be using the Fib extension tool. Now, to draw a Fibonacci extension, you need to select 3 different important pivots in this case, and traders would typically apply Fibonacci extensions onto a trend, and then to try to find, in this case, let's use an uptrend that started in 2017, again on the Euro-US dollar. And this uptrend actually started here at the beginning of January 2017, and it ended here in February. That was actually that high that we looked at when we used our retracements previously. Okay, so let's consider this as an important low, and that will actually be the first pivot or point that you select. And in this case, we'll be going to a higher high and then collect it to a higher low before this actual uptrend started going upwards. And in this trend, you'll see that, or in this situation, you actually see that price actually shot right through even the 200% because we had a really strong trend that lasted for the most of 2017. But what is particularly useful, and the way I like to use this, is that I would wait when I consider a trend or a new trend to have started, wait till price reaches my Fibonacci extension levels, and then wait for a correction to appear. And then I particularly like to then try to find the end of those corrections and then trade with the trend when the trend continues again. Now later on I'll be showing you an example exactly of how I did one of these in not real time, but an actual trade that I took. But what's important to notice here is that a lot of traders would be looking at these levels. So it's important to have them in the back of your head and to draw them on your own chart so that you are aware of when these levels are actually reached that you might expect a correction. In this case, we had a very small correction at the 100%. We have a bit of a larger one at the 1.618%, and then a very minute one here, the 200%, before price start breaking higher. And I typically would start using my Fibonacci extensions by keeping the first anchor point that we used here, this low here, to this first higher low, and then continuously walk forward my Fibonacci extensions as price moves higher. And in this case, price actually reached the 200% before one of the largest corrections of 2017 happened around 200% extension level. But again, just using this first range here, and this actual correction lasted for about a couple of months. And what's really interesting to note here is that if you apply that first ratio or range that you use to this first higher high there and applied it to the last bigger correction, you'll see that price ended at the 200% extension from only using this first little range over here. And this is something else I also noticed on this chart previously, that's if you use this low, go to that higher high there and that higher low here, you'll see that where both this first range and that second range's 200% level came in was where this actual uptrend ended, at the 200% confluence of using two different pivots before price started moving downwards again. And this is typically how traders would use their Fibonacci extension levels and how I would like to use them. In my case, I just prefer to use them to be aware of levels that's coming up in the future, and when those levels are hit, that I might be expecting a correction. And then once I see these corrections, I typically like to find the end of those corrections and then trade them when the trend continues, or when I actually hope the trend will continue. And that was just a very quick explanation or example of how Fibonacci extensions work. In this case, it wasn't an uptrend, but the same thing applies when prices move the other direction. Okay, guys. So next up, I'm going to be showing you how I actually use a combination of extensions or retracements with my knowledge of patterns or corrections to find actual trades and identifying trades in real time. So before we just jump into that, let me just clear off all of my drawing tools, and I would like you to focus on 2018 over here. When we had this first drop coming down, we were actually at a stage, myself and my members, looking at, let's just use my extension again, at this level over here. I used that high over there. Once price reached the 200% extension, start getting this pretty large, familiar looking pattern that developed and almost took around about 2 to 3 months to develop. Now let's just focus into that area a bit better. Let's take my extension levels off, and I want to take that off, and this shape over here that I highlighted previously, this big correction or pattern, I was aware at the moment, around about July, since I've been following it, that it was probably tracing out as what many people would call let me just use my other line there, a symmetrical triangle formation. And how these triangles are typically labeled, so you actually know at which stage you might be expecting an end of this formation before price continues, in this case downwards. Technicians, including myself, technical analysts, typically like to label these, and they are mostly labeled as an A, B, C, D, and E. Remember, guys, I actually traded this in real time, although I'm showing this now in hindsight. But there were some very specific clues that I picked up, and which gave me a good idea by the time here we were dealing with the C wave, that we could probably expect a triangle to be forming. That is not yet complete, but might near an end very soon. And what gave itself away was when I actually applied my Fibonacci retracement levels to this actual triangle. And if you would use the high of the A wave there, connect that to as your first point of your Fibonacci retracement and bring it down to the B point, you could then see that price stopped at the 0.786% retracement and started moving downwards again. Now at this stage, while I was looking at price action over here, it was just way too early to say like this was a triangle. I would have to wait for the D wave to bounce higher, and then that would then give me a very high probability that we might have an E wave completing in the near term before the correction moves lower. And if I use my same retracement levels, let's use that again, and I applied from the B wave to the C wave, then you'll see that price came very close to 0.786% retracements once again before price moved higher. And it was at this stage when price shot up that I had a pretty decent idea that we could be dealing with this last wave coming in. And when that last wave was in, to enter into a position and then trade with the trend, in this case downwards. So if we then went from the C wave to the bottom of the D wave, then you would actually see that there were three separate opportunities. 1, 2, 3 times where price actually bumped against the 0.786% retracement level, which ended this entire correction and price moved downwards. But to be dead honest with you guys, I actually took the secondary entry over here, and although that was not the end of it, I would definitely know where to place my stop, which was in this case above my C wave, which was a very small stop to use. Let's just use that for you guys for visual representation. So I could have put my stop over there, which I actually did, and then entered right at that level for a short, and then traded price downwards. Although it took a pretty decent good part of a month to move downwards, actually caught a really big chunk of this trade. My entry right about here where the 0.786% retracement level was. Let's just color that as a entry green. Sorry, let's make this then as our stop loss, and let's just color that as a green, and there we go. One very important part that I quite like to use my extensions when applied to actual triangles is where to place your stop or your target. In this case, the stop I knew should be placed above the previous wave that I labeled as C, because if price did actually go that high, I would be wrong in my decision, but in this case I was actually right, which was great. But where would I place my targets? And here yet again is where Fibonacci ratios, in this case extensions, come into handy, or to be very useful. And basically how I use my targets when trading out of a triangle would be to figure out where the halfway mark is of this A to B wave, in this case, and then go to the middle of this triangle and you'll see that the half of this first move to the middle of this gave me the 100% extension over here, which was where my final target was located, right over there. And you'll see that this actually delivered a very good, let me just get my short position, risk to reward ratio. Take it to there, and that one over there. Very good risk to reward ratio of 7.28 versus the risk that I took on in that trade. And you'll see this quite often, that when you also see corrective patterns, especially when we're talking about triangle corrections, pop up and you actually do trade them, that they also quite often appear towards the end of a last move downwards, which also warranted me to not be trading short anymore as soon as my first target was reached, when price reached the bottom over here. Okay guys, that was a quick presentation of I personally use Fibonacci ratios and how other traders commonly use them. And I also gave you an example of how I applied them to a symmetrical triangle formation on the trade I actually took. Now there's just one thing I want to mention here, and that is it is always a good idea to use your Fibonacci retracements or extensions in conjunction with other analytical techniques. And a lot of you might know is that I love using market geometry paired with multi-time frame analysis. And these are just my personal additional methods that I like to pair with Fibonacci ratios to find high probability setups in the markets. Because trading with Fibonacci levels alone can be dangerous unless you have a strategy that incorporates them together with other drawing tools, or even, as some people use, indicators. I hope you enjoyed today's video. Please be sure to hit the subscribe button below and leave me a like. I will be back next time with more insightful videos. Until then, guys, goodbye.